Well, regular viewers of this channel, once again, you have been vindicated because we got it right again. So just like we called this entire sell-off up here weeks before it happened for the exact right reason it happened, which was the bond market, with precise timing when it happened using the bond market trend line, we've done it again, all right? Because just like we said, save up your cash, save up your cash, save up your cash, and then rotate your bad things, and then it sold off, right? And then we had all that cash to buy. Buy at trend lines and price targets that we had in advance. We had our price targets before the crash even started. And so when we got to those price targets, we bought with conviction. All right. And as soon as that happened, I said, look, this is probably going to be a retest. We are probably at minimum going to get a double bottom. All right. And so once we got up here, I encouraged you. Remember, this applies to gold, silver, uranium, everything. I encouraged you, please do the same thing here as we did here. So in the run up, in anticipation of this event, it's the same thing. We had a run-up in anticipation of this event. I knew it'd be the same thing. We have been vindicated again, just getting call after call after call right in this market. And yeah, we're taking a bit of a victory lap because if you train for a triathlon and you win, are you going to keep it a secret? No. You're going to post pictures and you're going to be happy. You want to share it with your friends and your family. Look, Mom, look what I did. And you should be proud of yourself, right, for getting things right. All right, especially in the face of everybody else who, lost. It's like, okay, that's good. This is a good, normal human feeling. So let's celebrate it. And then once we do, let's move on. All right, so moving on, what do I think? Well, I'm buying here, right? Just like I said I would. And I'm happy to do it. I'm buying with conviction, and I feel really good about it. All right, and, the trend is your friend, and it's a scary place to buy. I appreciate that. Because if the trend line breaks, it implies that we've got a lot more downside. And if you were to zoom out on something like the weekly, in the case of NextGen, I get it. Look, you might come all the way down here. What's that measured move? That's 18%. You might fall into this chop down here. What's that? 30%. So yeah, if you fall out of this, it could imply that there is a lot more downside to come. So I get it. That's what makes buying the trend a bit scary. So in the case of this trend, it is clearly an uptrend. So the trend is your friend. We are still in an uptrend in uranium despite the broad markets selling off and losing their minds, right? Because even as the broad market set new lows, and remember, I predicted this too, by the way. I predicted this too. So as the broad markets come down and set brand new lows, all right, brand new lows, the things we like are still in their bull channel. I told you that would happen. I predicted it back here. I predicted it weeks in advance. I told you. I was like, look, all this you're getting. You're getting it so you can fall with the broad market again, except you won't have to break your own trend. You'll be able to remain bullish while the broad market goes bear. I told you this. I've got it right again. I'm just telling you, man, look, we're all over this stuff. We're all over it. And pumped about it too, because if you are prepared and we're prepared for this and you had cash for today and probably tomorrow before noon, something like that, it stands to reason that you could really benefit from what the market gave you today, because the market's getting it wrong. All right, the market's getting it wrong. They're taking treasure and they're throwing it on the ground and it's getting trampled all over. Right, and me, I'm doing my best to pick up as many pieces as I can and shove them in my pockets. I just wish my pockets were bigger. So that being said, you never, ever, ever, ever YOLO, right? That is dumb. We don't do that. So despite my conviction, I put in 50% of my cash that I wanted in the example of NextGen towards NextGen. I also bought silver stocks today. I bought Agnico Eagle. I bought... First Majestic, and then I bought two more smaller cap miners that I can't tell you their names because I got them from another newsletter I've been with for a while, and it just feels pretty crappy to kind of share that with you when it's somebody else's due diligence. But extraordinary value that I picked up today. It's like, this is probably a 20 bagger, not even lying, right? Really good value, and I bought it with confidence, okay, on prices that I've been looking forward to in advance. So happy to do it. And look at this. You can buy Dennison for $1. What's your problem? You don't want Dennison for $1? You don't want it for 95 cents maybe, right? It's like, what's the worst case? Maybe you come into this chop, maybe you fall something like this, 84 cents, right? So spend 50% here, spend another 50% here, right? Like, you need to be accumulating in this zone, because let me tell you something. Let me come over here. People are talking about the Fed raising rates 100 basis points tomorrow. We'll come out on the x-axis, and let's go to today's date. All right, that's the 14th. So tomorrow's the 15th. 100 plus 77 is 177. So if they raise 100 basis points, that puts us at 177 tomorrow. And look where it puts us. Exactly on the trend line, to the T, to the tick, to the tick. I don't think that's a coincidence, folks. I just don't. I don't. I also don't think that this trend line gets broken. I just don't. I don't see it. Keep in mind, if the Fed fails to raise at least 75 basis points tomorrow, that will be the equivalent, in my mind, to pausing rate hikes. And that's all commodities want to see. They just want to see the pause. You don't have to start lowering rates. You don't have to start printing money. Just pause rates. And as soon as they do, let me tell you something. Gold exploding, silver exploding, uranium exploding. They don't care, right? They just want the signal. People just want to feel safe, like when it's time to get in. That's it. And you can feel safe accumulating here, knowing mathematically that there's a ceiling, okay? If we go back and we look at the 10-year, all right, it's taken off. It clearly broke out. And the higher this number gets, look, things are already breaking. Credit spreads are already massive. And if you don't know what that means, it's just the spread between, say, bonds, treasuries, and high-risk credit, right? Like junk bonds and stuff. And the reason that the spreads are so high is because interest rates are going so high. And interest rates, when they go higher, it implies that there's no bidder. That's why the rates have to go up. That's why interest rates go up when people sell. All right, they're looking for a bidder, somebody willing to buy at that price. So what it's telling you is that when these corporations, when these entities can't catch a bid on their debt, the rate has to go up. And what it's telling you is that nobody's buying it. So what that means is that they're not going to get any money, or they are not getting money, right? That's why their yields are going up. Nobody's buying their crap. Okay, so that means that they're not going to be able to do whatever they wanted that money for. You know, and that might have been expansion. It could have been just staying solvent, right? They might have needed that money to stay in business. You don't know, but they're not getting it, and that's the point. There's a breakdown in credit, right? There's a breakdown in debt, so it's falling apart. All right, so we are at the cusp. The Fed wanted things to break, and now they are breaking. This is why I just don't see a whole lot of timeline left in this thing. Also, remember, I am quite convinced, I am sure that we are in a recession. It might end up being mild. I don't really care. I don't care in terms of my investments, because I know we're going to the same place anyway. It's like that analogy I made in the past. It's like if you go to a park, all right, and you can go for on a bunch of jog trails, you know, there might be a whole bunch of different paths you can take, but they all end up at the same place, right? It's like, so I don't really care which path we take. We're going to end up at the same trailhead, all right? So just understand the Fed's coming to a limit, but I'm convinced that we're going to be in this recession, mild or not, all right? And I'm quite convinced that it's going to start as early as 6 weeks from now when that July 28th Q2 GDP number comes out, okay? Because they've already revised this down to 0.9. There is not a whole lot of wiggle room here to be positive, all right? And, you know, give them 30 days, it could be revised down the same way Q1 was. And listen, as soon as that comes out, as soon as that's made official, you're going to get into the situation where bad news is good news again, because bad news just means that the Fed has no choice but to intervene. Because if they don't intervene, that means the end of the system, right? You let this thing fall too much, pensions are done, right? They're cooked. I mean, everything is over. It doesn't matter how much money they print, they'll never be able to restart it. So you can't let it fall too far. You can let things break. You can scare the hell out of somebody. You can let shoes drop. You can let Bitcoin collapse, right? You can let all these zombie companies go under, and that's fine. I think that's what they're looking for. But you can't let it break too much, or else you won't be able to restart the damn thing. So there's a limit on how far they can go. The whole point I'm trying to make here is that we're approaching it. Okay, we're approaching it. And remember, it's fundamentals and reality versus narrative. So as soon as that recession gets made official, that's a narrative that they can't overcome, right? How are you going to keep tightening? Look, how is Congress going to raise your taxes in a recession? how are they going to take food stamps and entitlements away from you in a recession, right? How are they going to do anything that they need to do to combat this debt problem, right, and this tax receipts problem while they're in a recession? They have no other option, my friends, but to print money into oblivion, and that's exactly what they're going to do, because the only alternative is to face you, holding a torch and a pitchfork. That's it. That's the alternative. We're going to get one of those two things, right? So Occam's razor suggests, in combination and confluence with history, because these things have happened before historically in empires. Once we get to this point, you just inflate your way out of it, all right? So that's just what's coming. So buy with confidence on this stuff. We are very much in tune with this, and we've nailed every call. And one day that luck is going to change. We're going to get some major things wrong, but right now we have, and I'm buying with confidence. I feel really, really good about it. And even if we do break these trends, I just think it'll peekaboo at best, right? Enough to maybe get this double bottom on an official capacity. Scare you a little bit. I just don't see this being a bad place to buy at all, especially not only in terms of price, not only on the y-axis, but especially in terms of the x-axis, right? Because let's just say hypothetically, and we're just going to talk now, that the price collapsed all the way down here to 424 or something. Well, that's a big deal if it stays down there for a year, right? But it's not a big deal if it flash crashes and it happens in 5 minutes and you don't even know about it till you're off work at the end of the day, right? It doesn't affect you at all. Does that make sense? So time is very important in terms of how much price impacts you. So I think especially on a time basis, these prices right here are just absolute values and steals, okay? So not only in terms of price itself on the Y, but also in terms of times on the X. You pretty much have to be accumulating gold, silver, and uranium, agriculture. Look at agriculture got bid today, right? Everybody's so scared in the markets, right? We came down. Look, we fell short of the trend line, but we hit that 500, didn't we? That 200. Oh, man, on the weekly, it's just so bullish. It didn't quite want to come down here, but this is what we've been looking at for so long. IPI finally touched it, and it got a nice rally. Let's look at the volume on the daily. Not bad, not bad. I mean, this is kind of what you're looking for. I think things look good in commodities broadly. I think when the market gives you these discounts, hopefully something like LXU, you can come down and touch this 200. I think that'd be great. But look, you got to be accumulating with confidence, because once these things take off, once the signal comes, once it dawns on everybody where we are in this process of our sovereign debt crisis, this monetary crisis, this fiscal policy crisis, this system crisis, right? The things we own will be the things most sought. And, the low valuations that they have today in uranium, some of these silver stocks and gold stocks, I mean, these things are going to move 30% a day. People are going to be chasing them. They're not going to be able to catch you. You have to accumulate while it's cheap. And I mean that in the most sincere way. I mean, these things have to be bought at these extraordinary values. They just do. And, I see the downside risk. I see on a chart like Hecla, I totally see how you could get a flush down to a level like this, to retest this February 2020 level, like most other things already have, okay? Some things have been stubborn. Some things have not done it. I can totally appreciate a move down here like that, all right? So if you want to spend 50% here, then line this up. You know what I mean? But the key word is accumulate, 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 and do it with confidence. I am... like I said, I bought Agnico Eagle at 48.50. It dropped down a bit more. It dropped down to 47.96. All right, but I bought at 48.50. I bought NXE at 386. I can't even remember. 386. And I've got other bids in to see if things come back a little bit lower. I'm seeing if I can get DNN under $1. And, let's just see what happens. USC closer to $3. That'd be nice. The market loves this company. It's very bullish. So some things aren't going to come quite all the way. So sometimes you just got to have the cojones to go out and grab it when you recognize it. But never FOMO, never chase. Just be patient. I think tomorrow morning could be another sell day until the Fed speaks. And again, if the Fed does anything less than 75 points, then that's going to be equivalent to a pause. I mean, they're going to admit that they can't fight inflation, and if they do 100, okay, well, now they're pretty much out of room, right? I mean, they've just front loaded so much that when we get the recession next month, what are they going to do? So I think that we're coming to the end of this whole waiting for the Fed game. Because the moment they pause, the moment they turn around, the gig is up, right? That's it. And I think we're getting closer to that moment than we are further away. I think people are getting this wrong, talking about recession in 2023, and they're going to raise rates all the way until, September, November. That doesn't even make sense to me. I may end up getting that wrong, but I'm going on record right now saying I just don't see that happening. I think it stops a lot sooner than that. Things are already breaking. They're not going to have a choice but to pause. Buy with confidence, and, that's it. Buy with confidence and don't get shaken out. Don't listen to all this noise. We knew that this day was coming. We've been talking about it for weeks. We've been talking about everything for so long. And I still think in the case of ratios like this, you look at gold, you look at GDX, the way it's stacking up to everything else, I still think gold's about to lead the way on everything. So bullish on gold and silver. Silver's so undervalued here. And I do promise to make a gold and silver video here soon, exclusive video. I need to do it. I know a lot of you guys come here for uranium. You really do need more exposure to these precious metals if you don't have any. I'm going to do my best to convince you to get in and why and make a bullish thesis for it all. But continue to look at things like Bitcoin too. Bitcoin's been a very good leading indicator of what's to come. And, I've made a few videos on this. I've always said, and I've gotten this 100% correct also. And I tell people, the day may come when you can buy more Bitcoin, but it's not until QE5, all right? The day that they say that they're printing money again, you can probably buy Bitcoin on leverage. But until that day comes, as long as interest rates are going up, this is going to collapse, absolutely collapse. And this $20,000 mark is the first meaningful target, just like, say, 3,400 on the S&P or 10,000 on the NASDAQ, right? But once you break below that, you really have a long way to fall. And we'll see what happens. But we're certainly getting to that first meaningful level to test and hang out. So maybe we get a bear market relief rally here in the near term, right? That could still happen too. People are pretending like, maybe the bear market rally is over or not happening, but this could simply be where it starts. So we'll evaluate these things as it goes on. We're going to figure this out and we're going to try to be ahead of it. But I think right now it's simply another good opportunity to accumulate, especially if you took advantage of the strategy we've had all along. You have the cash to strike. You have the confidence to strike because we've been talking about it in advance for so long. And you are mentally prepared for this moment. And just hang tight because I think it's all going well. And good luck out there.